So today we're looking at the top 5 hacks to mitigate rising capital gains tax. We all know the Labour government is going to target us landlords with capital gains tax. So this is for you landlords. These are the things you need to start thinking about in October before the budget so that we can get these things into place after the budget. They are going to increase capital gains tax, and it's very likely that it is going to be increased in line with income tax. So if you are a 45% taxpayer, you will pay 45% capital gain. If you are a 40% taxpayer, you will pay 40% capital gain. And you are a 20% taxpayer, you will pay 20% capital gain. So what I am going to say to you now is you need to think about this. It is time to really get your portfolio sorted, particularly if you are thinking of selling up. Hack number 1, take advantage of the capital gains tax relief. I know it used to be 12,000 and it's only 3,000 now, but it is £3,000. And if it's a husband and wife team or people that have done property together, then each person has their own 3,000 capital gains tax relief. I don't know whether government will change this, but ultimately this will save you money. And this is something that you will be able to do now. So let's hope they don't raise it from the 1st of November, but let's be honest, we don't know. Hack number 2. It is likely that capital gains tax is going to be linked to your income tax. So one of the things that you can do as a property investor is choose to defer your income, not take your income. And that way, we might be able to push some of that capital gains tax. So for example, if I was only a 20% taxpayer in that financial year, so 5th of April 2025 to 5th of April 2026, in that financial year, then I might have been able to pay a 20% capital gain rather than a 40% capital gain. So time your income accordingly. Make sure you do that because this is what's going to really work in your portfolio. Hack number 3. The next one you could do, if you're planning to cash flow properties until the day you die, nobody wants to talk about death, but if you are planning cash flow property till the day you die, on the day you die, your capital gain reset. Now, what's important is whoever you're leaving that stuff to will then be covered by inheritance tax, but depending what happens with inheritance tax, that may be less than capital gains tax. So it might be worth just deferring and holding on to your properties for the foreseeable future. Hack number 4, this is controversial, but it's one of those moments, isn't it, landlords, where you sat there and you thought, oh my goodness, I wish I did this years ago. Why haven't I dealt with it? Well, it's not too late. There are still some legally and allowable schemes to incorporate your portfolio and take release there. There are some real things you could do to help offset capital gain. Here's a big hack that you could potentially do is come and talk to us, email info@titlesplit.com and say, I am interested in incorporating my portfolio. Now we have partners, carefully chosen partners, who you will now be able to talk to, who will be able to advise you how to do that in the most tax efficient way. So email info@titlesplit.com and tell us that's what you're interested in, and we'll contact you and we'll talk to you. The next thing, hack 5, is I'm going to talk to some, it's a little bit complicated this, but we are experts at structuring people's portfolio so that they sell in a way that minimises their capital gain. And there are some really creative ways that you as a landlord could potentially protect yourself from the biggest mitigation of this risk. The fact of life, guys, is tax is always going to happen. But if you sell your portfolio or you work with people that can do this in a very structured way, I'm going to say in a very structured way, there are some really creative things that we can do to mitigate capital gain. Okay? So what I'm going to say to you is, like and subscribe here. This is really important because I want you to watch out for news that I'm going to be posting after the budget about how we're going to help landlords who are thinking about how they can exit from their portfolios in the most tax efficient way, but most importantly, still get the nest egg they were looking for their retirement. These are the things that we need to consider. So please watch out, like and subscribe, wait till we share info because we're going to be doing a webinar on this that's going to really help you. My name is Rachel Knight and we look forward to seeing you soon with another post about how we can help landlords.